Today on the Accounting for Our Community podcast, we have Janice Pomerleau, Managing Partner of SB Partners, and we are going to speak about the Underused Housing Tax. So this is new in 2023. So Janice, could you kind of explain what is this?
Sure. So the Underused Housing Tax or also known as the UHT, came into force on January 1st, 2022, actually. So the first filing is in 2023. The new act requires some non-Canadian and certain specific Canadian owners of residential properties in Canada to file an annual information return.
Okay.
This act imposes a 1% annual tax on the value of residential real estate owned on December 31st of each year if that property is considered to be vacant or underused. There are significant penalties for failing to file this return. And the rules that are related to who are required to file and what type of properties and the application of the tax are quite complex. So owners really should ensure that they are reviewing and understanding all of the specific details and filing requirements relative to their own individual circumstances.
So who is required to file the UHT return?
So that is also complicated. So unless a person is an excluded owner, the Act requires that the owner file a UHT return. And that return needs to be filed even if there is no tax payable.
Okay.
So owners who are affected and are therefore required to file a return are individuals who are not Canadian citizens or permanent residents in Canada, individuals who own residential property as a trustee of a trust, individuals who own residential property as a partner of a partnership, corporations who are incorporated outside of Canada, and corporations who are incorporated inside Canada but are not publicly traded.
Okay, so if a company is on a stock exchange, they would be excluded from this.
Correct, they would be excluded from this, but a company that's a private company incorporated in Canada would be included and required to file.
Okay. Now, when is the filing deadline?
So the filing deadline for the 2022 return is April 30th, 2023, and that deadline applies even if you are a corporation or an individual. It's the same deadline for both.
Okay. And are you required to pay tax?
So not all owners who file the return are required to pay the tax, as there are some specific exemptions for certain owners. Those who are required to pay, it is a 1% tax that is assessed on the value of the residential real estate.
Okay. And so how do you file this return?
So the return needs to be filed online, and what you need to do, or by mail also, you can also file by mail.
Okay.
It is a form that's named UHT-2900, and it is available on the CRA website. It is important to note that the separate return is required for each owner of each residential property.
Okay.
And you will also need a filing ID. So if you're an individual, that filing ID is your social insurance number.
Okay.
And if you're a corporation, it's a separate account under your corporation's business number.
Okay.
The penalty, though, for not filing that return for an individual is $5,000.
Oh, wow.
And for a corporation, the penalty is $10,000. So that means CRA is going to impose that penalty if the return is even filed one day late.
Wow. Okay, so have to file this return by April 30th, otherwise there's a significant penalty.
That's right.
Okay. Now, what are the different types of exemptions?
Sure, there's a number of different exemptions, and they are a little bit complex. Some of which I already did outline. So there's the exemptions on who qualifies for filing the return, like the specific type of an owner or exemption related to the different type of properties. But there are also 4 broad categories of exemptions related to the actual tax calculation.
Okay.
So those exemptions are also based off of certain types of owners. There's the second one is based on the availability of the property, specifically for properties that are under construction.
Okay.
There's also an exemption for the occupancy of the property, so who occupies it, for how long. And finally, there's an exemption for the location and the use of the property.
Okay. So as an example, if a residential home was being rented out, would qualify for an exemption?
It would qualify for an exemption, yes, if you meet one of those or all of those 4 requirements.
Okay.
Sorry.
Okay. So what is the key takeaway for the UHT?
So I think the key takeaway is significant penalties.
Okay.
And there are lots of complexities with the filing, so who files and how do you calculate the tax. So it's very, very important for owners, both individuals and corporations who own residential properties, to review all of the related rules and exemptions in order to determine the filing requirements that would be applicable to them.
Right. Okay. Now, SB Partners has a reference guide on the steps on the website to help clients and users kind of navigate this process.
Yes.
That link, it can be found on the website, and I can share that in the notes for this podcast.
Yeah, that'd be great, and I think it's very useful information. It's got a chart on who qualifies and the different levels of qualification.
That's great. Well, thank you, Janice. I appreciate you sharing information. This is really important. Key takeaway: file this return by April 30th, and check out the reference guide. Thank you.